look at your money and your spending logically by saying, what is the return on this investment? And I do this and I challenge all my students to do that so that you take the emotion out of it. If you are spending it on a candle doohickey in TJ Maxx in the checkout line, okay, what is the return on this spend, this candle spend? What is the return on it? Is it just going to go in a closet and not work for me? So like, what is the return on my investment? How is this money going to earn monies for me?
Do you think money takes up more life space than it should? On this show, we discuss with and share stories from artists, authors, entrepreneurs, and advisors about how they mindfully minimize the time and energy spent thinking about money. Join your host, Jonathan Dio, and learn how to put money in its place and get more out of life.
Hey, welcome back on this episode of the Mindful Money Podcast. I'm chatting with Jessica Perrone, and she's going to correct me if I said that wrong. Jessica is a seasoned finance expert with over 16 years of experience in the personal finance trenches. She's the mom of 3 teenage girls and a passionate advocate for financial education. She's dedicated to empowering young people, especially young women, with knowledge about money and investing. Jessica's innovative and relatable approach has led her to develop a curriculum that makes finance approachable, fun, and relatable for teens of all backgrounds. Jessica, welcome to the Mindful Money Podcast.
Thank you so much for having me.
I'm really excited for the conversation. Just before we dig into things, where do you call home and where are you connecting from now?
Okay, so today I'm connecting from Gladstone, New Jersey. And funny story about Gladstone, it was the epicenter of the New York City earthquake. So yes, our teeny tiny town hit the news that way.
Beautiful.
Yeah.
I live in Berkeley, so when you say earthquake, like we know what that means here. Like that's a big deal. It happens all the time. Where did you grow up?
So I grew up in Pittsburgh, Pennsylvania. I am the oldest of 8 children. And growing up, we didn't have any money conversations because there wasn't any money. The big treat for any one of us was to go to the grocery store with my parents to pick out that one potential treat. I have so many memories growing up in that sort of chaos. And now we're all like super duper close and best friends. It's amazing. It really is.
I've talked to a lot of folks, and I think one of the things that growing up in a family that struggles a little bit financially is that closeness is enhanced. Like you get a lot closer to people when you're struggling together. Does that fit?
Oh, absolutely. Absolutely. And so what's interesting about my family is the community and communal aspect of it. And what does that mean? Well, all of my brothers and sisters are all very handy. So they will go and help each other, like build decks or do home improvement processes and really help to enhance each other's net worth, if you think about it. And you don't see that a lot nowadays. So that's one aspect of it. And we're all very frugal. We talk about our budgeting and the deals that we have. And so it really has resonated with us. And I talk a lot about finding budget buddies, people to go on your journey with you. And my whole family are my budget buddies. It's really wonderful to have that kind of support system.
So how did that happen? Did your parents indoctrinate you into talking about money at the kitchen table, or was it you go to the grocery store, you get that one treat, and was there a lesson there? So what did you learn about money and maybe even entrepreneurship growing up?
So what's interesting is I think what I learned from my mom were 2 aspects. The first one is how to work super hard. My mom and my dad worked so stinking hard all the time. So seeing that type of effort put into not only providing for 8 kids, but also to think of what are some side income streams they could bring in to make ends meet. So that sort of work hard mentality really resonated with me. And I started my first job at the age of 13. I literally took my work papers to my mom and I said, please sign these. And I started waitressing at the age of 13. And so I guess that work ethic was definitely shown and learned from my parents for sure. I mean, I could talk on and on about this, but the rest of it really came from just my work life.
So I'm curious because you worked when you were 13. I worked when I was 12. I've had guests on that work when they're 12, 13, 14. There are always people that we sort of promote this idea of work ethic. So I have to ask the next question. You have 3 teenagers or 3 kids that are basically roughly the same age as my kids. Have they had jobs since they were 13?
So yes and no.
Oh, okay.
Okay.
Where's the catch? Who's the catch?
Okay, how do I put this? So this is kind of like a side story because I'm a gentlewoman farmer.
Okay.
So again, the communal work ethic. So did they have jobs? Yes, but were they all paid jobs? No. So whether it is out in the farm, taking care of the animals, mucking stalls, mowing, whatnot, they are all part of the family unit to create an end result. So we're teaching a work ethic, but is it necessarily monetarily assigned? Maybe not. But that's where the budgeting comes in because all my girls have budgets they have to maintain. So I still talk to them about money. So for example, if they want to get, their nails done and their hair done on the same month, that's not going to happen because it's not in the budget. Right. But again, like to your credit with your mindfulness, when you anticipate something, when you work towards something, when you finally get it, it's that much sweeter. And I feel like putting that budgeting in for them allows them to sort of have that mindfulness around money and the process behind it as well.
Can you point to like a single or maybe a couple of different experiences as a kid with 7 siblings, this experience that would become integral to your money story, something that you learned as an experience in the household that's like, I took this out of that experience?
Oh, there's so many. That's such a hard
your favorite one.
But so there's 2 that came to mind. Okay. And if you don't mind, like sometimes I go off on these rabbit holes. So if you want to, bring me back to number 1 or number 2, please feel free to. So the number 1 is resourcefulness. Because of our income levels, basic things, the needs of our lives, and we talk about, needs and wants. I'm sure you talk about that too in mindfulness. A need is dental care. And so I used to go to the dental school to have my dental work done because it was discounted. And instead of having braces, they told me to suck on popsicle sticks. So like if I sucked on the popsicle sticks, that my teeth would align better. So I attribute my teeth actually to the popsicle stick resolution, believe it or not. So really that sort of education about needs and wants is a large part of my life, and also resourcefulness. I would say that is such a wonderful way not only to save money, but to make money on the side. The second one has to do with credit scores. My family...
Wait, you learned this as a child? Credit scores?
The lack thereof.
Okay.
And the implications of that.
No kidding.
At a very young age.
Tell me.
So my family was a cash family, and my mom was an immigrant. She believed in cash, and a lot of immigrants don't understand that paying cash for everything will not help your credit score, and therefore will not help you with your financial passport. When it came time to apply for loans for college, we could not get loans for college because my mom did not have a credit score that was high enough to co-sign for loans for me.
Wow.
So what I had to do was take a year off between high school and college and actually save enough money for my first year of college. So I could pay, and then I had to go through and pay cash and work alongside my college education to pay for it. So that was a huge lesson that I learned about credit scores. And now a large part of my education is understanding how to, and this is part of my before investing course, which is the financial ducks, the things you want to get in a row before you start investing. And cultivating your credit score is another great way to save money in the long run. So those would be my two, like the two things that pop into my head. I mean, there's so many things I learned in this journey, but those would, I would say, would be the two that just popped in my head when you asked the question.
Resourcefulness and needs, wants, resourcefulness, and the cultivating your credit score. I have a quick credit question for you because my son is 19. He has a credit card. He's held him for about 7 months now. He checks his balance every couple weeks and he makes a payment every couple weeks.
I do too. I do too.
Okay.
I do too. Go ahead.
I wait for the statement. I was like, is that going to hurt his credit score? Does the way I do it hurt my credit score? Does it matter if you do that?
Okay. So this is such a good question. And I'm so glad you're asking it because I started paying off my balance on a weekly basis because it's so easy to lose track of how much you're spending. So in a cash environment, you kind of see what you're spending. But if you wait a whole month to see what you're spending, then you can very quickly get behind. That's also a budgeting strategy that I have. Your balance on your credit card is actually, and your payments are a plus. That is potentially something that will increase your credit score. So that's a good thing. And the other reason why I did it was because the checking of your balances by the credit bureaus doesn't happen and line up with where your zero balance is. So I, for example, had an emergency that happened and I wanted the points. So I put a new water heater on my credit card and then I paid it off.
I know that emergency. I've had that same emergency.
Yes. And thank goodness I had the emergency fund to cover it. But then when I paid it off and then I looked at my credit score and my credit score went down and I was like, why did it go down? Like not a lot, just like a little, but I'm obsessive about it. But it went down a little bit and I was like, that's weird. So it took a snapshot of my credit utilization mid-month. And that's why it went down. So after that, I just paid off on a weekly basis as opposed to on a monthly basis.
What I'm hearing you say here, and this is very difficult for me to admit, but what I'm hearing you say is that the way my son manages his credit card is better for both tracking and his credit score than the way his father, who's been a financial advisor for 30 years, manages his credit card. That's what you're saying right now, is the way my son does it is the right way. The way I'm doing it's wrong.
Okay. I am going to say, because I am forever the diplomacy.
Oh, perfect.
Everyone's journey is their own journey. Okay. And sometimes that one point doesn't matter and that's fine. Right. And that's part of mindfulness, right? Like you can be obsessive like me. And it's also the way that you look at money, right? That the whole psychology behind money. And sure. And some people are more laid back. And as long as it's fine on a monthly basis, and as long as they're getting great interest rates, that extra 25 points doesn't matter to them. Fortunately and unfortunately, this is something that I notice and I have lots of intention behind. So there is no right or wrong is what I'm trying to say.
Of course. I think literally, just specific, dot all the I's, cross all the T's. I think he's doing it right. And you're right. It doesn't bother me at all that I'm doing it my way. It's my way works for me. And I'm not offended at all. If he's doing it a better way, that's awesome. I just had no idea.
Well, it's funny because those are actually, it's something that I do as a strategy I do. So
that's awesome. I'm going to tell him that.
Can we ask what your son's name is?
It's Eli. My son's name is Eli.
Okay. Yeah. So kudos to him. Good for him.
I'm going to turn him on.
Good for you, Eli. This is a shout out for you.
I'm going to definitely have him listen to this episode. He'll feel good about this. Before we look at the work you're doing at, her Fin IQ, what brought you to where you are today?
Oh my goodness. So my ex and I built a fintech company. And when we first started building it together, I had very little financial knowledge. And I was working with institutional trading desks, both domestically and internationally, equities, fixed income, and rates. And I was like, you know what? I got to learn this stuff. I got to learn this stuff if I'm going to be working in this space. So I actually taught myself how to trade.
Mm.
And when I was looking at your website about the countless hours and the monies that I lost trying to figure things out, I completely agree with you. Like, there is so many ways to lose money, whether it is just not knowing what you're doing, like investing in a small cap, investing in a TikTok tip, and the move has already happened. I mean, there's so many ways to really to lose money if you don't know what you're doing. However, I learned so much, and I created strategies, and I use 3 strategies personally. I have my own investing account. I do have a robo advisor that I use, and I do have a financial advisor that I work with as well. I believe that knowing how to use the various types of ways to invest your money is very important so that you can get the best return on your investments. But it just really does take a lot of education. And that's why I put together Her Financial IQ, was so that women could find a resource to understand the process and the how-tos to invest their monies. And I'm happy even if a woman has a better conversation with their husband, or if a young lady that's new to the workforce puts extra money to her 401k to get those company matches. Like, these little processes that aren't intuitive for us as we grow up without someone telling us the ropes. These are all the ways that my courses help women.
So there's two things I just want to, I guess, pull back the curtain on a little bit. One, I've had this conversation with women who've been guests who have siblings who are boys or men. And they tell me that the conversation at home when they were growing up, their brothers would get the conversation about money.
Yeah.
They would not get the conversation about the money. And so you work with
Yeah.
a lot of women. Do you hear that same thing? Is that not universal, but is it pretty broadly spread?
Absolutely. Absolutely. But just think about it. The times girls spend with their moms and the times boys spend with their dads, right? There's also STEM research that kind of comes into this as well. So let me just back out a little bit, that there is STEM research that shows that if a mom says to their daughter, I can't do math, then those girls are more likely to say, I can't do math as well.
Right.
And if you have a mom that says, I can't do investing, or this is too much for me, well, chances are the daughters are going to have that same type of approach to investing, saying, I can't do this. And I've seen it. I've seen it with women that are so nervous coming into like a group lesson or a one-on-one coaching. Like, the anxiety is right there. And I'm like, no, you can do this.
Yeah.
And I think that's the one thing, that's another thing that we're trying to do is build confidence that yes, and I identify with investor. Here's another interesting experience I had recently with a group of a Girl Scout troop. And it was about 45 middle school to high school Girl Scouts. And we were all in a room, and I asked them what they all want to be when they grow up. And only 2 out of the 45 said, accountant. And that's it. Like, no, like, I want to be a financial advisor. I want to go to Wall Street. And I said, well, why? And they're like, too much math, too hard. They had already had this ingrained conversation with them, ideology that they could not do it. So I went through, the speech that I have with the Girl Scouts, and I said, well, in your lives, I still want you to wear that investor hat. I still want you to identify as the investor no matter what field you go into. And so by the end of this talk with them, I had created a new dialogue within them. And when I asked them to say, okay, how many of you promised to wear the investor hat? They all put their hands up. That group, that conversation with these girls reset that ideology that yes, they can be investors too. I'm sorry. Again, I digress. No, I have these rabbit holes. So
it's perfect, actually. So I remember pre-pandemic, I used to go to 3-4 conferences every single year. And I remember this is just like 8 years ago. This is not 1990s. This is not the 80s. This is not the 50s, right?
Yeah.
This is 8 years ago. I would go to the conference and I would sit up in the front and there would be a, somebody that's a speaker at a financial services conference, looking at all the financial advisors and saying, hey, remember when you're speaking to a couple, occasionally look at the wife. And I was just like, what? That's so silly to me. I live in a very progressive area. So my clients are very female strong families. Like women are the primary breadwinners. It's very
Oh,
normal.
wow.
Or they are divorcees, or they're widowed, or they're managing it themselves. They are doing it solo in many cases. And they're doing great. They're doing exactly what they need to do. They're fine at it. There's no struggle. There might have been a struggle getting there. This is why the work you do is so important, right? The industry still doesn't really pay attention, it's like difficult for them to focus on educating women. So it's what you're doing is fantastic. I wanted to ask a question. The second question was, you mentioned kind of 3 ways to invest: the DIY, the robo, and the hire an advisor. So can you just kind of not describe the 3 ways, but how do I know which way is right for me? What's the way I can tell the best way for me?
This is such a long answer. So how about I'm going to give you a short answer.
Please.
And it's a little shameless self-promotion. Take my Investing for Beginners course, because we go through it. It is substantial, and it really does, because there's so many things to think about, whether it's risk tolerance, life stages, how much you have to invest. So there's a lot that goes into it. And in these courses, we even talk about, if you are going for a financial advisor, if you're looking for a financial advisor, what are the things to talk about? Questions to ask in that first meeting, what to expect in that first meeting, what is the risk tolerance questionnaire that you're giving to them, and what does it mean? Because I remember when I first started teaching the course with Investing for Beginners, a lot of women were opening up with, not as substantial beginning investing points, or opening up some robo-advisor accounts. And they would come to me and they're like, Jessica, what is this questionnaire? What does it mean? They're stressed out just about the questionnaire. And so what I would do is I'd take them through it. And then I'm like, I got to create a whole module on what it means. So we actually go through the questionnaire. We talk about what it means, which is funny. A lot of it is just making sure that your financial ducks in a row, which is what I talk about in my Before Investing course, it talks about how to get your financial ducks in a row and making sure they're in a row before you start investing.
I want to loop back just a little bit. What was there, a trigger point or an experience? What is it that inspired you to say, okay, I'm going to do her FinIQ now?
My ex and I went through a divorce. And during the divorce, I stepped down from the company and I was trading on my own. And I was lonely. I missed being on Wall Street. I missed having people to talk financial markets with. So I was like, you know what? I'm going to do a book club for women traders. And I couldn't find any women traders. And then I was like, you know what? I'm going to teach women how to trade. And so I went to the soccer field, the basketball course. And I'm like, and I'm like, there's so many smart stay-at-home moms. Of course they want to learn how to do self-directed investing and place trades. And the anxiety that I even saw the rosacea go up their necks. Oh, I can't do that. My husband does that. I'm like, really? I mean, how could you not want to learn how to do this? So I realized, and that's how I did my Investing for Beginners course first, was I just need to help them create the confidence and understanding and knowledge to even have the conversation with their husbands, or accompany their husbands to the financial advisor. So it really was creating the basics to go to a financial advisor with confidence and understand what is being talked about in those meetings. And then another aspect of that, you asked about, the ways to put it together. Well, once you identify the ways, what are you going to invest your monies in? And that's where the stocks and ETFs course I created. And it's simplified. I have some strategies that really break these down so that you can get an idea of where risk tolerance, stocks, and ETFs, where they all converge in your process. So, and people are like, ooh, that sounds heavy, but I promise you, I have women that are reading their statements after taking all 3 courses and actually understand what's going on with their investments and feel so empowered. They're talking to their financial advisors. They have goals. They have plans. They're doing with confidence. And that's really all I could hope for. And I also, if there are financial advisors out there that want to educate the women in their practice, or bring the women into the conversation and help educate them so that they have more confidence coming into the offices, to feel free to reach out to me. I'm happy to bring this education to the women in the various practices out there.
That's a good way to for you to actually reach out to a larger audience. I think is through the advisors that at least share the need or desire to educate people. Maybe I'm cynical, but I do have this. One of the things that Wall Street does, or that investors do, or the advisory community does, is makes it opaque, makes it difficult. I mean, that's how people are forced to trust us, right? Which actually does the reverse, right? It makes it so we're not really trustworthy.
Exactly.
Except those of us who are trying to educate is what I'm hoping.
Absolutely. And it's funny because you're absolutely right. There has been studies done that shows that financial terminology was purposely created to obfuscate. And that's really what I'm trying to do with I am doing, there we go. I am doing with my courses, is to really break it down and make it approachable and friendly, because I love finance. I think it's so much fun. I'm such a finance geek. I even teach about like interest rates, and how interest rates can also sort of approach how you look at your investing, or whether you're going to invest in a house or take out a mortgage, or even shopping for high yield savings accounts, like how all of this plays in your financial wellness. And knowledge is power. And the more that you know and the more you understand, the more power you have to make really great financial decisions.
So you're a finance geek. I'm a finance geek. I don't know if you've met a lot of other finance geeks, but I know people that are in the industry that aren't finance geeks. And when my clients are like, I don't want to think about this. It's not that they're not capable, and not that they think they're not capable. They just don't want to do it. They want somebody to do it for them so they can focus on their business, or the book they're writing, or their family, or travel, or whatever the thing is, right? So I'm curious. It sounds like you're interested in helping the people that want to be finance geeks, but the stuff you're teaching is good for people that are just want to get the basics. Is it one or the other, or both?
It's both.
Okay.
You're absolutely 100%. These are the foundations that I feel everyone should learn. Okay, so let me just back up a little bit. So you have your doctor, right? And you understand that is in your toolbox, right? And you have the basic knowledge of, how your insurance works and how they're going to help you, right? And then you have your dentist, and the basics of that. But your financial wellness is such a large part of your life and stresses. And if you understand the basics, then you can prevent a lot of stress in your life and create harmony. And I really love what you talk about, and sort of envisioning where you want to go. Well, how can you envision where you want to go if you don't know where to go, right, or how to get there? So these are all ways that you can get to that vision. And I lay them out in a very easy to understand and approachable manner.
You describe your work at Her FinIQ as empowering women to take control of their finances. So why focus on women? I think we might have covered a little bit first. And then what does the focus on women change the advice at all? Is the advice the same advice, or is there something different you're telling women?
So the reason why, and I also help couples and families, but really bringing into the curriculum and the modules, because I have video modules and whatnot, and creating the community. Women in general are more timid talking about finances. When there is
it's a safe place,
a man present, they will take the subordinate role frequently, not all the time. Okay. But frequently. And so this allows women to have a platform to talk about finances and not feel quote unquote dumb, because we're not dumb. It's just, we're not understanding it. And I can't tell you, when I first started out, how many times a man would say to me, oh, you don't know what that means? I'm like, no, I don't know what it means, but I'm not dumb. Can you please explain it a different way? Literally. So to have someone say, these are not dumb questions, ask away. If you have this question someone else had, and have a really supportive and nurturing environment to talk about finances, that's really what I'm trying to do. I do coach both females, men. I also coach families because families that budget together will have more success as well. So my modules and my courses are very women centric, but my coaching is family counseling and coaching, I'd say.
The second part of that question is, does the advice change because it's women?
Okay. So that's a loaded question because it's interesting because I've had men, this is why I started coaching men as well. Men come to me and say, look, why are your courses just for women? We as men have a lot of stress on our shoulders being the quote unquote breadwinners of a family. And we are expected to know all of these things, and we don't always know about these financial basics as well. And we don't necessarily want to go to our bros because we're embarrassed about going to our bros about it, and they feel more comfortable going to a woman to talk about these financial basics, whether it is personal finance or investing basics or whatnot. I feel like when it comes to spending and needs and wants and sort of life stages and where you are, that conversation is a little different. And I would say that, and I actually did a sort of research just out of interest about the whole, like, as a society, women and appearances and the cost that comes with that and the debt that comes with that. So I do have a little white sheet that I created on that, if anyone's ever interested in seeing that, just because again, your mindfulness. I can't say enough about your mindfulness because there are so many influences of society on us, but especially women. And being mindful in your spending, being mindful for purpose so that you are not filling your life with stuff and therefore you're spending less, because really your wealth is an equation. It is assets minus liabilities. And if you are spending too much or if you have too much debt, then you can't build wealth. So It really does all come down to this mindfulness that you talk about.
Spending, yeah. So I read in the blog that one of the goals was to help women build courage to fire their financial advisors who just aren't cutting it. First of all, bravo. I'm for that. One of the right, totally I am. One of the objectives of Mindful Money is to sort of, I guess, challenge advisors to up their game. With that in mind, can you describe an advisor who is cutting it? What is their circle of competence? How do you tell?
And that's interesting because I have a whole segment in the Investing for Beginners about talking about what to look for with a financial advisor. A relationship with a financial advisor is like a relationship with a spouse. You don't go on one date and expect to find your forever partner. And people don't think about that. Especially women don't think that. People in general don't think that way. They're like, oh, I'm supposed to date around advisors. Yes, interview. Ask people that are happy with their financial advisor, especially women. Word of mouth is one of the best ways to do that. And then interview and see synergies. And when you know your investing thesis for yourself and where you want to go and these life stages, and when you have all these realizations of what you want, then you can even identify more. Because if you don't understand what's going on and if you doubt yourself, you could be bullied. And there are financial advisors out there that will bully you into sort of their set routine. They won't follow up with you. The only time you hear from them is when they have to check off their list that their clients were contacted at least once a year by their firm. There's a sort of a sweet spot with financial advisors. And I see you're smiling.
That's true. That there is a requirement that you have to talk to everybody once a year. I'm just noting that that's a fact. Yep. Once a year. Know your client role. Yep.
Yes. I also talk about in the Investing for Beginners and talking to financial advisors for the first time, ask where their fees are. How are they making their fees? Is it commission? Is it fee-based? Is it by AUM? how much AUM? Will you be talking to that person? Because these are salespeople too, and they might have a whole team underneath them. So they might have the person selling you, and then you get handed off to a junior person based on AUM. The AUM is assets under management. Okay, I'm like backing up a little bit here.
Yep, good.
So, for example, if you have only $5,000 to invest. I mean, and that's and typically minimums to go to financial advisors are $5,000. But that's another thing. Asking what the minimum is to invest with them is an important part of looking at it. But if you have an investment of $5,000, but they typically work with $1 million accounts, you might not have sort of the attention that these other accounts will. So what is the average account size is a good question to ask. How many women do they work with? What is their typical clientele? How long have they been in it? So if they're too junior, they might be hungry. They might give you a lot of attention, but they might not have had all the experience and all these life stages to really help you. But if they're too old, maybe their book is too big and they're not going to give you too much attention. They don't know what the latest, software is out there to do estimations and whatnot. So there is really a sweet spot. And I do talk a lot about this in the Investing for Beginners course as well.
So I want to ask a very specific question. I think a lot of the world, and this is changing. When I started at being an advisor, the thing that I did was I would cold call someone and we try to get them to buy a stock. And then if they bought one stock, we call them up and try to get them to buy another stock. If they said they don't want a stock, then we try to sell them a bond. We try to build a relationship, one investment at a time.
Yes.
That's late 1990s. Okay.
Yeah.
Today, it's more about building a relationship and looking at the whole picture and doing some financial planning. My question is, do you think that people or advisors have any special ability to pick investments? In other words, to choose an investment that's going to outperform another investment, time the market, prognosticate about the economy. Is that something that advisors have the capacity to do, or is that outside of their circle of competence?
So it depends on the type of advisor you go to. A lot of advisors have the software, they input your inputs, and then they diversify amongst set portfolios based on that risk tolerance. So there isn't a lot of ability to go outside of those funds. The other aspect that you'll see with financial advisors is that they're not allowed to sell away from their account or the things that are available through that financial advisor. So for example, if there is alternatives like real estate funds or whatnot, they're not curious to really go out and maybe diversify into those types of funds. So sometimes financial advisors will stay in their wheelhouses, but there are financial advisors out there. And I can think of a couple that went from the trading desk on Wall Street and went to different strategies at different financial advisors that incorporate that into their strategies. And usually those are considered more risky and sort of the overall diversified portfolio. But yes, there are still advisors out there that offer that as a service for their portfolios.
So some of the more private things,
Yes.
Real estate, et cetera.
But also like you said, trading strategies, like news trading strategies, or, I'm just thinking of one advisor and I get their research report on a regular basis, and they have different themes that they're focused on to create higher returns for their clients. Again, higher return is frequently with higher risk. So that would probably be part of the riskier part of a portfolio stack, so to say.
Everyone that listens to the podcast know that I'm a big believer in just the efficiency of markets. In order to, you're going to get that same average. The question is how much work you're going to put in to get it. How much risk are you going to take to get it? And that's really everything. You'll get kind of what you deserve when you invest. If you're too aggressive, you're going to get what you deserve. If you're too conservative, you're going to get what you deserve. It's just it kind of makes sense. So there's an enormous amount of noise out there, and I want you to simplify it for us. So if you met a young woman, maybe she's on a plane, you're traveling across the country, and she's curious about how to become personally financially successful. What is one thing you tell her when she gets home, do this today?
Oh, that's so hard. That's such a hard question.
That's not the zinger. We're not even to the zingers yet.
Okay. I will say, listen to my courses. How about that?
Oh, you got to give us something out of the course. Give us something out of the courses. Give us a nugget.
Okay. So if you are interested in building your wealth, number one is to just get your financial ducks in a row. Everything really comes down to budgeting. It really does. Creating a budget, sticking with the budget, and allocating money towards investing, like getting to the point where you can allocate money towards investing. And you do have to pay off bad debt with high interest rates before you can really focus on building wealth. Because if you have high interest credit cards, that's compounding and you are losing a lot of money and you're potentially getting into a position that's not great. So I would look at your debts, look at your liabilities, and really try to get those under control so that you can start building wealth. And look into yourself on your spending. And look, okay, this is my one thing I want to say. I just thought of it. Okay. Look at your money and your spending logically by saying, what is the return on this investment? And I do this and I challenge all my students to do that so that you take the emotion out of it. If you are spending it on a candle doohickey in TJ Maxx in the checkout line, okay, what is the return on this spend, this candle spend? What is the return on it? Is it just going to go in a closet and not work for me? So like, what is the return on my investment? How is this money going to earn monies for me?
And this is on spending money. That's an interesting take.
On just, it takes the emotion out of the concept. If you can just check yourself when you're spending, wait and check yourself and say, what is the return on this investment?
So the second half of the question is actually more difficult. So what's one thing? What's one thing that she might be doing that she should stop doing?
It has to be spending more than you make.
Not more difficult. That's bottom line. Absolutely.
Yeah. And not in a place where you're paying off your credit cards on a monthly basis or a weekly basis.
If you're smart, Eli. Yeah. So just before we wrap, I want to come back to the personal again. Is there anything people don't know about you, or maybe you've mentioned it and they don't remember, that you really want them to know?
Ooh, anything people don't know that they should know. That's a tough one.
That's the zinger. There you go. Zinger.
That is the zinger. I feel like it is that I'm approachable. And you can approach me via social media, email. I love talking to people. I love hearing about their journeys. Share it with me. And I really, I have been successful in my life. I love mentoring people. So just know I'm approachable. I am in your corner and I am here to help you even figure out what the next step is in that journey.
That's a perfect segue. So tell people how to connect with you.
Sure thing. So I'm Jessica Perrone, founder of Her Financial IQ. My handles are Her Fin IQ, HERFINIQ, and my website is herfiniq.com.
Jessica, thanks for being on the show. All that's going to be in the show notes, and I appreciate your time today. This has been great.
I so enjoyed talking with you. Thank you so much for having me.
Thanks for listening. Full show notes for each episode, which includes a summary, key takeaways, quotes, and any resources mentioned, are available at mindful.money. Be sure to follow and subscribe wherever you listen to your favorite podcasts. And if you're enjoying the content and getting value from these episodes, please leave us a rating and review at ratethispodcast.com/mindfulmoney. We'll be sure to read those out on future episodes.